Bitcoin is back in action. The leading cryptocurrency has bounced back from the red zone and is now eyeing the $30,000 mark again. Is this the end of the bearish trend? Or is this just a dead cat bounce before another plunge? What factors are affecting Bitcoin prices? In today's video, Gareth Soloway has shared his Bitcoin analysis and has shared his viewpoint on Bitcoin price predictions and how recession and other economic indicators can affect the crypto market. To know more details, stay tuned until the end of the video. And of course, be sure to subscribe to my channel for more of the latest updates on the economy, crypto, and the market. Let's get into it.
At least for Bitcoin, it's that 30,500 level, right? So if you can get above that and confirm, that was the psychological level here that kind of denoted the 2021 lows, right? Where we had that big dip right down to 30,000-ish, give or take. So again, that would have been a key break point we can see right here. So on a technical basis, that's kind of what I'm looking at. And that's one of the reasons why I expected the market to push us back down on Bitcoin. Now, looking at like the CAC and various other indices, I think number one, you have the US markets that are more likely to be in a bear market that will continue to see selling. You have some issues there in Europe. They're still coming out of some things. But overall, the bottom line is, let's keep in mind that the Federal Reserve has said that we're going to have a recession in the second half of the year. Yes, they said mild, but Rand, you remember transitory, right? So they said transitory, and look at what we got. They tell me mild recession. Right away, my mind jumping to probably at least a medium depth recession. And then you have other players like Warren Buffett coming out saying that year over year, one of his retailers' sales were down in the last month 22%. So the consumer is stopping their spending, and that's going to create a recession. So risk assets are wildly mispriced here, and they're going to have to correct sizably. I actually have a downside target this year of 3,300 on the S&P 500, and I also have a downside target for the next year of below 3,000. A recession in this situation could actually be much, much worse. The main issue with that is that how does the Fed lower interest rates aggressively with inflation still north of 2%, right? I mean, we're still talking 4, 5, 6% inflation. Now, if it gets down sub 3, maybe they have some wiggle room, but we're not at that point yet. So to me, that's a very scary thing. And stocks and crypto have to be very aware that the Fed may be somewhat handcuffed here if we do hit a recession. And then the big question is, if we get into a recession, how do we get out? Does the global markets, do they know how to get out of a recession without the Fed printing money? And if the Fed can't print money, do we get in this long-term recession that could be very rough on stocks as well as risk assets like Bitcoin?
I'm sure you're all excited to see Bitcoin recovering from its recent slump. After dropping below 28,000 on Monday, Bitcoin has rallied over 10% and is now trading above 31k. But is this rally sustainable? Can Bitcoin break out of its range and challenge its all-time high? Or is this just a dead cat bounce before another plunge? The answer to these questions may depend on how Bitcoin behaves around the key resistance level of 30,500. Breaking above that level would be a bullish sign. However, Gareth Soloway thinks Bitcoin will face more downward pressure, as the global markets are facing a lot of risks. The US is likely in a bear market, Europe is still struggling with some issues, and the Fed has warned of a mild recession in the second half of the year. Warren Buffett has also warned that inflation and recession are serious threats. Consumer sentiments are also not that great. All this will lead to a recession and a sell-off in risk assets. The main challenge in this situation is that the Fed may not be able to cut interest rates significantly if inflation remains above 2%. This is a very worrying scenario, and both stocks and crypto should be alert to the possibility that the Fed has limited options if we enter a recession. Moreover, the crucial question is, do the markets have a way to recover from a recession without the Fed's stimulus? If not, we may face a prolonged recession that could hurt stocks and other risky assets like Bitcoin.
I think the market wants good earnings here. And the reason the market wants good earnings is that the market realizes with inflation where it is, the Fed only has limited abilities to lower rates. And so if you see earnings falling off a cliff, that's going to mean, we're heading towards a recession. The Fed cannot loosen that quickly. Remember, the Fed is priced to actually hike rates in about 9 days for their next meeting. So again, what are they going to all of a sudden do, a pivot and start dropping rates with inflation still at 5 or 6%. I just don't see it. So if you start to see really a crack in earnings, it could mean not just a mild recession, as the Fed has said, but actually a worse recession, which again, with the Fed's inability to print money and get us out of it because of inflation, that could be really, really bad. If inflation can get back below or right around 2%, that gives the Fed the wiggle room to be able to lower rates and maybe print money in the future. Up here, they can't do it. I mean, just the bottom line is, we could see a bad situation with the economy. What are they going to do? Print money and then send inflation to 25%? I mean, we're going to be the next Venezuela. That's not going to happen. So you do not want a recession in the near term here with inflation this high.
The market expects strong earnings because it knows that inflation limits the Fed's capacity to cut rates. If earnings decline sharply, it could signal a recession that the Fed cannot ease quickly. The Fed is likely to raise rates in the next meeting, so it cannot reverse course and lower them with inflation still high. A severe recession with high inflation would prevent the Fed from printing money to stimulate the economy. Otherwise, we'd become like Venezuela. Let's get into the next clip to hear more from Gareth Soloway.
I'm still negative on Bitcoin, absolutely. I am negative on the S&P going into earnings. In fact, one more chart I want to show you guys, if I could pop up my screen here. So this is the monthly chart of the S&P 500, and I'll leave you guys with this thought here. Look at that insane run from COVID, the pullback, and the sideways consolidation. The next chart I'm going to put up here is called the psychology of the market chart, and you're going to see it almost is a perfect replica of what we have seen here. All right, so here it comes right now. If you look at this chart here, what I have up on my screen, if we can pop that up, look at the run up, the pullback, and the sideways consolidation. So this is fitting perfectly with the complacency period after euphoria and the pullback in the S&P 500. What we see on the chart here is the next phase coming is not a pretty phase for the markets. This is where we start to realize that a recession is coming. The Fed can't get us out of bed here. They can't save the day. And again, that's what I'm looking at. It's amazing how those two charts match up almost tick for tick. Us not breaking above 30,500 and confirming, to me, still tells me that we're still in a bear market. So you just want to be overall careful, but I do expect major support around 25,000.
Gareth Soloway remains very bearish on Bitcoin and the S&P 500 as we approach the earnings season. He compares the monthly chart of the S&P 500 with the psychology of the market chart and explains how they show a similar pattern of a surge, a dip, and a consolidation. According to his chart, the next stage isn't a good one for the markets. This is when we start to realize that a recession is looming and the Fed can't rescue us. Gareth Soloway also highlighted that as long as we remain below 30,500, I think we're still in a bear market and we need to be cautious. Let's check out this next clip. And of course, be sure to give a big thumbs up to this video.
The bottom line is the 25,000 is just a major pivot point on the chart, right? You had this kind of blip right here. We had the big dip down to this moving average, and then we had the run up where we stalled right there and finally broke up. So that now becomes a big target area of 25,000. But really, if you look down here, I mean, you're talking about getting down to that same moving average as a possibility in the not too distant future. And I do think that, if you look at the froth, and I said this, and you kind of mentioned it, how you were saying about liquidity in the market, how much leverage is in the market. Think about how bullish the global crypto markets have been. It was very reminiscent to me of when you had crypto at 69,000, that bullish bias in the markets, yet we were here at 30,000. To me, that's a negative divergence, and that's something that we have to be very scared about. Let me go to the ETH BTC chart here. And again, you can see on this chart, there is no doubt about it that, again, we could see that pullback here. But actually, if you just humor me, I want to show you one other chart here. It's the Bitcoin dominance chart. And this actually could be telling us that we could be setting up for a drop in the Bitcoin dominance side of things. And what I'm seeing here is a little head and shoulders pattern emerging. And again, if we look at this, you have a little shoulder here, right? And we have this move down here. Here's your head, and then down to the shoulder. And then we could be making a little bit of a shoulder. So if you break approximately this area right here on the Bitcoin dominance, you could actually see this coming down, Bitcoin's dominance coming down decently, possibly all the way back to this trend line. So what that would mean, it doesn't mean to me that the alts are going to rally. It just means that Bitcoin could actually play catch up to the downside to where the alts were or are.
So what do you guys think? Are you bullish or bearish on Bitcoin? Do you agree with Gareth Soloway's analysis? What are your thoughts on Bitcoin dominance? Do you think Bitcoin will break below the 25,000 level? Or will it cross over $30,000? Let me know your thoughts in the comment section below. And of course, don't forget to subscribe to my channel for more updates and insights on economy, crypto, and the market. And of course, be sure to hit that bell icon to never miss any video. Thanks for watching, and see you next time. Adios.